We are going to begin today's session with a conversation with Czernich, founder and CEO of Round2 Capital Partners. Christian, welcome to the show.
Thank you, Ramana.
So let's get acquainted. Let's get you introduced to our community here. Tell us a bit about yourself as well as about the fund, Round2 Capital Partners.
Great, yes. Thank you for having me here. I'm happy to talk a little bit about what we're doing. I founded Round2 Capital, now it's 3 years ago. We run a 20 million euro fund currently. And what we are doing is investing into tech scale-ups, not early-stage startups, but those that already have €1 million or are around €1 million in turnover, using a revenue-based finance product. So that means that we don't invest into the equity, but we basically buy a share in the revenues of those companies that we invest in. This, yep.
Let's understand the model a bit better because obviously it's slightly different from what we normally encounter. So you're saying you want to see $1 million in revenue already that has been what, bootstrapped? This is $1 million of bootstrapped revenue already happening in the company?
That's right. That's ideally the company is fully bootstrapped, or it has an angel investor or two angel investors, but typically they are not sponsored by VC firms. So we are looking into cases where the entrepreneurs have been building the business on their own.
And is there a particular business model that you're looking for? Is this like a $1 million in ARR, annual recurring revenue for a SaaS business, or it's $1 million of any kind of revenue, any kind of business model?
It's not necessarily SaaS. We prefer SaaS because the revenues are recurring. So you run a subscription model where there's some kind of stability in the revenues the companies are generating, and the gross profit margin is very high. So there is not a lot of material costs, if any, other than for Amazon Web Services or something. There's a low need for working capital. That's, so to say, the preferred businesses. We can also invest in other businesses than SaaS, but then they have to have high gross profit margins and low working capital needs, so that the company can be scaled without major needs in capital.
And what kind of check sizes do you write into these situations?
We write checks between 300,000 euros and 2 million euros. That's where we are at the moment. So, and we have invested across all of those sizes.
300,000 euros to 2 million euros, and what are you? Just give us an idea about the terms. If an entrepreneur has bootstrapped to $1 million and wants to raise 300,000 euro with you, or let's say €1 million, what kind of terms are they dealing with here?
Yeah, so the major differentiating factor is that we don't interfere into the cap table. So my philosophy and our philosophy is that we really want to help entrepreneurs to grow their business and let them stay in control. So therefore, what we do is we fund the companies, and we get a share in their revenues in return. The revenue shares are typically between 3 to 5% of the turnover. So let's say you have a business that is generating $100,000 per month in revenues. If we have a revenue share of 5%, then we would get $5,000 each month as a repayment of the funding. And we don't get this forever. We get this revenue share until a certain cap is reached that we define when we enter into the business. And the caps, they vary between 1.35 to 2 times the funding amount. So if we very easily, if we fund a company with $1 million, we get the revenue share until we have $2 million back.
So it's like a debt that is paid back as a part of revenue share with some multiple of the revenue as the cap. That's the model.
With some multiple of the funding amount, yes. Funding amount. So if we fund $500,000, we get the revenue share until, let's say, we have $1 million back.
Right.
And then the financing ends. So if there's an exit before that, that's nice for us. So that's good. We have nothing against it. Then we normally exit the business as well at times of the change of the control. If there's no exit, then we don't care. We just have the revenue share until we have reached the cap, and then the funding ends, and the entrepreneur can stay in control the rest of his life. So this offers a lot of more flexibility for the entrepreneur. We don't force them to sell or to very aggressively pursue an extremely steep growth path. If they want to do this, of course, we are very happy and we support them. But if they don't want to do that, that's fine for us as well.
Yeah. Okay. And what about geography? Where are you doing this?
Yeah, so we are an Austrian-Swedish fund. Basically, we are located in Vienna, in Austria, and in Stockholm, and in Sweden. And we do deals currently mainly in the German-speaking part of Europe. So that means Austria, Germany, Switzerland, and in the Scandinavian countries, Finland, Sweden, Denmark. We are also looking into Norway. But we have quite a substantial deal flow. So we get around 1 pitch deck per day, which is really nice. And we get pitch decks from all over Europe. So we're looking right now into 2 cases in the UK. We have cases from Spain, from France. But this is not something that we actively pursue. We actively focus on the German-speaking part of Europe and on the Nordics.
And how many companies have you invested in following this model?
Until now, we have invested in 11 companies. So we made our first investment 2 years ago, and we are about to invest in a couple of more. So, I mean, now, of course, we have the COVID crisis, so we haven't been doing investments now since beginning of March. But normally, we do 1 investment per month. That's our run rate.
Mm-hmm. And let's do a few examples of the kinds of companies that you have invested in. So just pick a few from your portfolio and talk us through what they do and why you thought that they were a good fit for your model.
Sure. I mean, as I said, we have predominantly invested in B2B SaaS firms. This is around 70% of our portfolio. So let's take, for instance, the Finnish firm Vainu. That's a bootstrap SaaS firm that has more than 10 million euros recurring revenues already. So this is already quite a sizable business. The guys that have been founding these companies are of course great guys. They managed to bootstrap the business to that size. And they don't want to get involved with any VCs because they are already they have a size already where it's not necessary anymore. Still, they need some money to accelerate their growth, and this was just a perfect match with our model. So we can provide them with funding. They can accelerate their growth, but they don't have to let anybody into the cap table. We have another case, I don't know, for instance, Homemaker in Sweden. That's a company that is doing prop tech. And there we invested very early on because this went through a good personal contact. We invested a very small amount in a very early stage. So they had about €500,000 of turnover, and then we just increased the funding amount as the company was growing, and they are now on a very nice track, and they have still basically a clean cap table. Well, I mean, we have other cases. We have a company in Hamburg, in Germany, called Nubo. There you have a couple of business angels that are invested. The company is growing very nicely. They have around, I think it's now close to €2 million of recurring revenues. And they're operating at around break even. And we invested, I think, 300,000 at the beginning, and now we just recently increased to 500,000 euros. They have also other funding sources, but we are an important part of their funding mix. Yeah.
Do you have other firms, other funds that are doing this model that you're operating in Europe?
I mean, there is one or two funds in the UK that are running this model, and we have seen now also that there's two new funds in Berlin who start to work with this model, not exactly the same model as we run it, but similar. So I think we are really the pioneers in Europe, and now we have, of course, other funds that do the same and start to copy us in a way, and that's really fine for us because it just shows that our model is actually something that's valuable.
Absolutely. Very interesting. Very interesting. Now, have you seen any exits yet?
I mean, we would have had an exit before the COVID crisis, actually. That has hit. This exit is for the moment delayed a little bit. You know, our portfolio is still very young. I mean, as I said, we started to invest 2 years ago, so we don't have any time pressure on exits. But yeah, they will come, of course.
Yes, of course. So, Christian, there's one thing that I must tell you is on the 1Mby1M blog, we do this entrepreneur journey series of case studies where we invite entrepreneurs who have reached at least $5 million in revenue, and then we do these very long feature stories on them. So to the extent companies in your portfolio crossed $5 million in revenue, you should definitely reach out to us, and we'll be happy to do case studies on them so that your model gets more, publicity and awareness.
Okay.
The new model and unique model, we'll be very happy to cover it.
I can talk to the firms that have surpassed 5 million in our portfolio and ask them. I think that would be great.
Terrific. We'll be delighted to have them in the program. All right. Well, that's very interesting and a different perspective on startup financing, folks. I'm happy to be able to expose this community to what Christian and his firm Round2 Capital is doing in Europe. I have seen a few of these kinds of innovations in early stage financing, which is really important, and I'll tell you why I think it is really important and why we wanted to feature Christian in the show. The venture capital industry generally is looking for these unicorn businesses which go from 0 to $100 million in 5 to 7 years in this hyper growth mode, and they're looking for $1 billion valuation and so on and so forth. But that requires that you have a very large $1 billion plus TAM, total available market. And that category of companies that have that size TAM and that kind of fast growth trajectory is not common. Hyper growth and hyper large TAM is not common in business. So there are many more $5 million, $10 million, $20 million, $50 million ideas than these $1 billion ideas. And one of the stated goals of 1Mby1M has always been, for the last decade, to support these entrepreneurs who are working in the non-unicorn, non-venture capital mode. So these kinds of innovations that Chris Chen is highlighting in his firm and in today's conversation are really important because this gives us a financial vehicle, financing mechanism with which to finance those other kinds of companies that may not grow at such a high pace and may not be, venture-style companies. So, great, Christian.
Yeah,
wonderful.
I couldn't agree more on that. I had an earlier career in academics, so I've done a PhD, and I was really trained in statistics, and my focus area in research was decision theory, and it's really interesting. I mean, there's a lot of research showing that people are very influenced by extreme values. So, and then they overestimate the probability that they will reach these extreme values. I think it's very important to have these role models of these tremendously successful startups. That I think it's really important, but this is not the norm. This is not reality for 99.99% of all entrepreneurs, and the economy as a whole is typically built on these mid-sized companies. Not only in the German-speaking Europe. I mean, this is of course the strength of the German economy, for instance, but it's the same also in the US. But everybody's chasing to become this unicorn, and everybody wants to invest in a unicorn, even if the probability is extremely low. And I think that's really important, and I think it's great that you highlight.